Jal, thank you so much for taking out time for us. Can you just talk about the last 10 days? What has changed in Reliance Industries, deal after deal? What is now the leverage level? Is markets, investors now absolutely confirmed about the leverage levels at the company?
So I think this has been in the works since a long time. You'll recall that in October last year, Reliance had explicitly stated, I think at the time of its AGM, that they are talking to the FANG companies and the global tech companies to get in strategic investors to both add value as well as monetize in the form of cash flows. And I think that's all come to a fruition. The sequence of events, clearly, I think what they were waiting for is first to announce with a strategic partner first, which is in this case Facebook, and then which is nearly 10% stake, 9.99, and they've stated that a similar stake sale that they're going to do with others. And hence we are seeing a fruition of the second part, which is with what's the name of the company? Silver Arc, is it? And Vista Partners. So our thought is that there is more to come. I would think to a maximum of 20% stake sale will happen. I think they have done now in the region of, is it 13.4% odd? And of course, what they're also doing is that each subsequent investor, which is essentially unlike a Facebook, these are don't bring as much value to the table. They do, but not as much as Facebook, and therefore the valuations are at a premium. So I think that's the process which is underway, and clearly that is triggering value, because even prior to this, the institutional investors, the mutual funds have been usually underweight Reliance, and the game of chasing continues. As the stock goes up, funds got to buy faster, and therefore the game of chasing continues. To answer your second question on the debt and cash flows, if I'm not mistaken, that's what you were asking. So essentially, Reliance has stated that they've got a net debt of 1.6 lakh crores and that they would be debt-free by the end of this year, which now seems a very high probability. In fact, pretty much I'd say a done deal. However, we've estimated that the debt is higher if you include suppliers' credit, spectrum liabilities, and we are of the opinion that the debt is more in the region of about 3 lakh crores. With the Facebook deal and Jio Platforms, that would bring in nearly about 1 lakh crores of funding, plus the rights issue of 54,000 crores, plus the BP PLC deal, which is about 7,000 crores. So we're talking about 1,60,000 crores coming from this. We've still got about 1,40,000 crores more to go of debt. We would think by the end of this year, they would have about 50,000 crores of free cash flow. So to that extent, the debt comes down even further. And if some of the rest of the sale of, if the fiber InvIT sale happens, which is 1,30,000 crores, and or the Aramco deal, which is 1 lakh crore plus, then they would be home free even on our numbers from a net debt perspective. Having said that, there's a third very important point that I would like to make, is that we're not too sure if being a zero net debt company is the best thing in the world as well. I mean, it's a great thing in the near term and in this environment where everybody's viewing, risk has gone through the roof. But debt does bring you a certain amount of tax break, and therefore a modest amount of debt is actually desirable. So I wouldn't worry if actually Reliance doesn't go to zero net debt, even on the higher net debt numbers, which the street is taking. In fact, I view some net debt as a positive thing.
Right, Jal. Always some amount of leverage is good. It gives an uplift to the EPS. So that's something which is important, which even you are highlighting. Okay, so that was one part, what they had told, what they have done, and how they have executed. What does the second part of the deal mean? Getting Facebook out. So earlier it was always, valuing the core business and then valuing the consumer business later. But with these deals that are happening in, you think there will be a fixed value that will be put to the consumer business as well, and the core business may actually see a lower value going ahead? Is that something which now the markets would try to re-rate?
See, the Facebook deal actually goes hand in hand. There are two parts of the Facebook deal. Firstly, Facebook has put in money into Jio Platforms, so it is a part owner there, and therefore that value sort of has got enhanced. But a second part of the deal is basically they have got into an agreement where they will develop the sort of Kirana store platform and basically like a mega app, a single sort of app to exploit the entire e-commerce platform. So that's a second agreement. Now there is a value enhancement even in retail. It's not one or the other. Let's also keep in mind that typically what Reliance have done from day one and time immemorial is that not only do they take very large potential bets in industries which could become potentially very large eventually, and they are early in the game, but they also do significant vertical and horizontal integration, which allows them to exploit the entire opportunity and create a value proposition which nobody else can match. So effectively, the Jio Platforms and the retail business trying to marry the two on at a certain level is actually value enhancement for both. Potentially, how would Facebook add value to the retail business? One must understand that on the so customer base is king, right? Reliance Industries Jio has got 388 million mobile customers. Reliance Retail has got 125 million dedicated loyal customers for its retail business on the retail side. And here now in WhatsApp, you've got another 400 million customers, which are complementary customers, because Jio has actually got has expanded the pie, and really more recently it has been upping the feature phone customers, while a lot of the original Vodafone and Bharti type of customers on WhatsApp. So the two platforms are complementary, and by developing a single app which will have potentially everything that you can do on that, in a sense, the My Jio is already under development on that front, but this would be another such significant platform. Will try and encompass several things, and you've already got a very large portion of you've already got a very large customer base, notably some of the more recent not exactly comparable platforms, but Paytm, for example, they're spending a lot of money on customer acquisition. Here, Reliance has got nearly 1 billion customers there. Now, how do they leverage? What all do they do with those customers is what they are developing, and the ecosystem to do that from a technology perspective, really.
Okay. Mr. Irani, we do know that Jio also, of course, has huge fintech ambitions. That, of course, is no doubt. There is their ambitions around lending, around insurance. So far, that has been a bit limited. You mentioned how Jio Money is already sort of in the works. Now, all of these deals, even for that matter, the most recent deal, the Vista investment as well. Vista is basically a tech-focused PE fund. All of this is essentially to fuel the ambitions for fintech, specifically for Jio?
You have hit the nail on the head, I would think. You're absolutely right. So as I mentioned to you earlier, what does Reliance do with all these customers? How do they capture a larger portion of their pocket, and how do they sort of horizontally integrate in a more significant way? And certainly the credit component is potentially a significant part. So, but this will come at a much later date. Firstly, on the lending front, now as they transact with these customers, whether it's Jio Retail and all these 3 crore Kirana stores, today they've got 500 Kirana stores already up and going, but their target is 3 crore Kirana stores, and all these customers that they're doing different things with, they're building a database. Now they've got an AI running in the background, just like a Google, just like a Facebook, and they know the customer profile. So therefore, there's a huge amount of data mining, risk mitigation, which is going on in the background, which will then allow them to see, for example, which customer is potentially more credit worthy than the others. There are, on a very small scale, even in India, just dedicated platforms who do this credit assessment, online credit assessment. Now, what I understand is that typically these class of customers, which are of course high risk customers, their borrowing cost can be 16 to 30% plus. Of course, in this environment, it would be a lot higher. But the thing is that you can, of course, charge them a high. So if you've got a customer who's paying today 30%, given your risk mitigation and understanding of that customer's profile, you can actually charge him, I'm just guessing, 25%, but with a much lower risk because you understand that customer significantly better. So there's a massive option value in these things which is going on. And let me tell you the other thing on the fintech space. For example, in credit cards, I understand that there is a 2.3% fee that it gets charged somewhere in the system. And 1.8% out of the 2.3 is actually charged to the guy who owns the customer, who introduces the customer. Now, Reliance has got 900 million customers. So you can imagine the likes of Paytm, spend so much money in customer acquisition. Now, Reliance has got 900 million customers effectively on the ecosystem and a potential to earn 1.8% on credit card transactions. So there's a lot which can be done in the fintech space, and these are just some. Insurance is the other thing. But the whole idea, I think, is not to do these in pockets, but actually do it in a fully horizontal and vertically integrated manner.
Data is definitely the new king, and it's Jio and Mr. Ambani that own it all synergistically. Look at what's possible for Jio when it comes to fintech. Mr. Irani summed it up completely. Thank you so much for joining us today. And yes, it's a third check written for Jio. It is Vista now, which is the world's largest exclusively tech-focused PE fund that has bought roughly about a 2% stake in Jio Platforms for a little over 11,000 crore rupees.